Carlson. And I guess the chickens have come home to roost for General Motors.
That is the case, or at least that seems to be the case. Hi there, Francois. Hi there, everyone. It's earnings season over on Wall Street, and a slew of quarterly reports have come in this Thursday. And General Motors has sparked headlines after a sharp drop in profits between January and March. The world's second biggest car maker took a hit because of a deadly recall scandal. Delana D'Souza has more details on that.
It's GM's worst financial performance in over 4 years. The company's first quarter profit tumbled 86% to $125 million. Profits were hit after the automaker paid $1.3 billion for recalling 7 million vehicles globally. Recalls related to faulty ignition switches is the biggest crisis the company has seen since emerging from bankruptcy protection. They've also overshadowed CEO Mary Barra's first quarter at the helm. The company admitted knowing about problems with ignition switches for over a decade. Earlier this month, Mary Barra testified before the U.S. Congress. She promised a new company that would focus on safety. But Barra has a tough road ahead. She needs to fix GM's image while steering the company back to profitability. Meanwhile, General Motors has signaled it could be subjected to more recall-related charges throughout the year. They are trying to avoid hefty criminal fines Toyota paid to the U.S. Justice Department for misleading the public. This week, GM returned to bankruptcy court. They argue that claims over ignition switches should be against the old, bankrupt GM and not the new company.
OK, we're going to take a closer look at other earnings in just a moment. But first, the head of the European Central Bank has delivered his clearest indication yet that he is ready to take a more proactive stance to boost the Eurozone economy. Speaking in Amsterdam, Mario Draghi said that the ECB could embark on broad-based asset purchases. The condition is that inflation would have to continue to be low. The central bank is under pressure to boost the economy and also to avoid deflation. There have also been calls on the ECB to take action against the strong euro. Mario Draghi says that a strong euro in itself is not a reason for action, but its effect on the wider economy is. Let's listen in.
The exchange rate is, as I've said many times, it's not by itself a policy target, but a rise in the exchange rate, all else being equal, implies a tightening of monetary conditions, a downward impact on inflation, and potentially a threat to the ongoing recovery.
And if we stick to the Eurozone, the recovery in Spain appears to be gathering pace. Spain's central bank estimates the economy grew by 0.4% in the first quarter. That's in comparison to the previous 3-month period, and it's the strongest quarterly growth figure in 6 years. Spain also says that its jobless rate in the fourth quarter was lower than first estimated at 25.7%. That's still, though, close to last year's record high, above 26%. Now, despite the geopolitical tensions over Ukraine, German companies are feeling more upbeat about the future. German business confidence jumped surprisingly this month. That's according to a monthly survey of around 7,000 firms by the IFO Institute. The reading went from 110.7 in March to 111.2 in April. There have been fears that German exports could take a hit if tensions with Russia persist. But the IFO Institute says that German exports continue to flourish. Now, we have seen those geopolitical tensions play a part during trading on Thursday. Still, though, we saw European markets closing mainly to the upside. And if we look at the US markets this hour, you'll see here that well, we have seen a little bit of effect of those geopolitical tensions in Ukraine, but strong Apple earnings, which came out on Wednesday, are being seen to help the markets, especially the Nasdaq over on Wall Street, with the Nasdaq up 0.7%. Stronger than expected durable goods orders is also helping out on Wall Street. Let's talk you through the European close then. We saw the Frankfurt DAX close above the flat line ever so slightly. It was weighed down in particular by those Ukraine concerns. The other indices, though, we saw some stronger than expected earnings playing a part for the Paris CAC 40 and the London FTSE, and both of those markets closed in positive territory. And if we talk you through a few other companies in the spotlight, shares in Alstom were up more than 12% at the close in Paris. It follows a Bloomberg report the American giant General Electric is about to make a $13 billion bid for the French engineering firm. Alstom itself tried to douse the speculation, saying it's not aware of any potential offer. Meanwhile, shares in the consumer goods giant Unilever came under pressure. It came as the company blamed a strong euro for a 6% fall in sales during the first quarter. The maker of Dove soaps and Ben & Jerry ice creams still says it's upbeat about global economic prospects. Chief Executive Paul Polman says conditions are improving in southern Europe. At the same time, he expects continued growth in emerging markets. And over in the United States, shares in the owner of United Airlines are falling. It comes after the American carrier reported a first quarter loss of $609 million. United blames part of the loss on harsh weather, which forced it to cancel 35,000 flights this winter. United is underperforming other major US carriers after they reported quarterly profits despite the weather. Okay, that is the business news for now, and I'm going to send it back to you, Francois.
All right, many thanks. Marcus Carlson with more business news later. Time now for sports. Let's say hello to Dan Levy.